We welcome our 404 viewers. Let's take a look now at your market news. Asian stocks fell on Thursday morning as investors grew even more concerned over US-China tariffs due to kick in within hours and which threatened to plunge the world's two top economies into an all-out trade war. The US is set to begin enforcing tariffs on more than $34 billion in Chinese imports from Friday. Now, Beijing has vowed to respond with its own tariffs immediately, arguing that it has no choice but to fight and accusing Washington of opening fire on the whole world with these trade restrictions. With a public holiday in US meaning no lead from Wall Street for anxious traders to follow, and amid ongoing concerns about the slowing Chinese economy, all eyes were on the looming tariff deadline and fears of escalation. Now, in Hong Kong, the Hang Seng fell off 0.5%. Tokyo's Nikkei also lost 0.8%. while the Shanghai Composite Index dropped off 0.9%. Let's go now to the Johannesburg Stock Exchange. Arabile has all our market news. Good afternoon, Arabile. Over to you.
Yeah, good afternoon, Nzinga. Well, the interesting part, and I think the element that we'd want to discuss from the onset is, of course, the healthcare stocks, considering that healthcare market inquiry. That will be of key interest. Of course, we'll unpack that in a moment or two. But at the same time, the JSE is headed higher today. No impetus really coming out of the United States, of course, considering that yesterday was the 4th of July. So those celebrations marking a public holiday in that market. China as well going into today, a little bit mixed, really. You know, a few stocks going down there, but the tech-heavy stocks were the ones who really gave a little bit more impetus, rather, to the market trading there. But with that in mind, let's take a look at how your lunchtime trade is going on in Europe and locally. Just taking a look as well at your Bitcoin at $6,636 for one Bitcoin and 94,352 Rand as well for the same Bitcoin as well. Chantal Marks, investment analyst at FNB Wealth and Investment, joining us today for the market outlook. Chantal, I suppose let's start off with just that healthcare market inquiry, perhaps not so much on the theory of it, but certainly the impact it may have on the likes of Netcare, Mediclinic and Life Healthcare as well, the big fish sort of in that sector. Do you think that this inquiry at all shapes how they'll move, how markets will look at them, the market price itself?
Well, I mean, what we've seen today is that Netcare and Life Healthcare, which is most South African exposed, is actually up on the day. Mediclinic down. I'm not exactly sure what the reason for that is, but they are only a third, about more or less a third exposed to the South African healthcare market from a revenue perspective. But yeah, I mean, if you look at this inquiry and the results of it, the very obvious finding that the healthcare market in South Africa is highly concentrated. I mean, we only have 3 big players, and that does have its own impact on competition, because usually if you have a more fragmented market, you have more players putting pressure on one another from a pricing perspective. And then also quite a bit coming out in terms of the health insurers and how they are not innovative enough in terms of pricing. So, for example, Chantal, with a hospital plan, who only goes to the hospital once every 6 years, I'm not effectively priced by my medical aid. And I think that most consumers would feel that that is fair. But nothing in there that is going to result in massive penalties for either insurers or for hospital groups. And also nothing groundbreaking coming out of the inquiry. And I think that's probably why you see a bit of relief in the SA names.
Even the medical schemes, I mean, Discovery itself, I mean, that's not the only part of their business, granted, but 0.8% higher today clearly unaffected as well by this.
Yeah, and I mean, if you look at some of the other insurers, they're actually down on the day. So Discovery most exposed to medical aid, so you could probably garner that had something to do with it. It's a little bit of a relief that even though there were findings and they were legitimate, it's not going to impact on the bottom line immediately.
Yeah. Let's take a look at another equity story. Anglo Platinum selling off that 33% stake as well in the Bafokeng Ramusane joint venture that they had, and that's then right through to Royal Bafokeng Platinum. They're obviously splitting off a lot of assets that they've had, and this is just another step in that direction. Is this helpful?
Yeah, I mean, Anglo American Platinum have been cleaning up their portfolio for a while. You'll remember that their kind of most inefficient mines, the Rustenburg mines, were sold to Sibanye Gold a couple of years ago. Sibanye basically specialize in more narrow, deep, and dangerous type mining, whereas Anglo American wanted to move closer to being more mechanized. I think this JV with Royal Bafokeng wasn't really a core focus for them, and for Royal Bafokeng, I think that they would have over time wanted the full the full mine to themselves anyway. So I don't think it's surprising. Unfortunately, Royal Bafokeng has been loss-making over the last year or so, so it's not the best time for them to make an acquisition. But they are going to raise some equity, about 4.8% of their market cap, and hopefully shareholders approve it. Well, they've already gotten buy-in from their biggest shareholder, which is Royal Bafokeng. And yeah, then there's a deferred payment of cash over 3 years. So they've structured it in a way that makes sense for them from a balance sheet perspective.
We'll keep an eye on that one. But at the same time, Naspers is considering listing on Hong Kong. That's going to be quite interesting. Yeah,
so I mean, they've been trying to get that discount narrowed to the 10-cent price for quite some time. And not even just that, but there's some of the parts, which is actually even higher than the 10-cent stake. So they've looked at a couple of options, and an offshore listing is one of them. What they're saying is that if they get a little bit more offshore demand for the stock, then that could result in a narrower discount. And if you could get the South African free float to be slightly lower, then investors in South Africa can be a little bit more aggressive in the way that they hold Naspers. They don't necessarily have to limit it to an underweight position. So that's kind of the rationale around that. I think it'll make good sense. I just don't know where the primary listing is going to be. That's going to be an interesting one.
Yeah, that will be quite interesting. At the same time, if we take a look at just the broader picture, the macroeconomic picture, South Africa in itself, yes, fine, we got Standard Bank PMI coming out yesterday, and it showed a much better picture. But overall, South Africa's economy isn't doing as well as we thought it would.
Yeah, I mean, the Standard Bank PMI was basically the only positive print we've seen in 3 months. So most of the high-frequency data has been actually quite poor. Ever since we got that very sharply lower GDP print for the first quarter, it just seems as if high-frequency data has turned down a little bit. But I mean, the first quarter is always pretty weak. It was weaker than even the weakness that we were expecting. But we do anticipate slightly better growth in the second quarter, definitely on a quarter-on-quarter basis.
Positive growth, or is that going to be, because I mean the risk of a recession as well is one that we possibly could see?
No, so we don't expect a recession. We do expect positive growth from the first quarter to the second quarter. Remember, the first quarter has a lot of base effects in it from a usually strong fourth quarter. You have Black Friday in the fourth quarter. You've got the festive season trading period in the fourth quarter. So the first quarter usually is quite poor. And the second quarter, we do expect a much better print. But yeah, I mean, a lot of economists are now paring back their expectations for growth overall. It's still expected to be slightly better than last year, but certainly not close to the 2% that the guys were bandying around at the beginning of the year. I think we are slightly below 2% now. I think we've moved closer to about 1.7, 1.8%.
Clearly interesting picture there. Is it enough to really change the picture in South Africa's economy? Is going to be quite interesting. Chantal Marx, investment analyst at FNB Wealth and Investment, joining us to unpack the markets. Of course, the big issue does come up as well tomorrow China and US tariff increases, and that change is certainly going to bolster and change the market, and just how things are going to go. Who retaliates first? Who pushes in first? $34 billion worth of tariff price increases, and that could spike up to around $400 billion as well from the United States. That picture is certainly scary, but that's a look at how the markets are performing for now. We'll unpack a few more of that tomorrow. That was a look at the markets. Nompumelelo and Nzinga coming up right after this.